Hey guys, Doug the Retirement Guy. We got a new review here of Kurv's Google ETF, the GOOP fund. And of course, it's always the same question. Is it good for your retirement fund or is it good for added income? Let's take a look at this. Kurv is advertising 18.68% dividend yield on their GOOP. Let's see. Let's check it out. The Kurv Yield Premium Strategy Google ETF, GOOP. This is where Kurv is pretty much doing the same process they do with a lot of their ETF funds. They're investing into Google, they're selling call options onto it to enhance the income strategy, generating some cash flow. They're using some other things as of treasury bills and bonds to collect interest on, and then any extra dividends or so on that comes into it. Their distribution right now, 16.99%, 30-day yield, 3.34. So numbers are pretty right on top of everything. Holdings, as we said, U.S. Treasury bills plus their Googles, very, very similar to all the Kurv programs. So why would we want to invest into GOOP? Well, it comes down to is the 16.99% return with the 3.34% 30-day SEC yield. That 16.99% return is over a specific period, and it comes from both dividends and interest, capital gains, and so on. Always, it's like anytime you get over that double digits, we'll always say it's a high significant risk. Anytime you get into options trading where they're doing the covered calls, you're going to have that risk. There's going to be more risk out there. And there's always that potential of, the velocity or the volatility of the account of going up, down every which way. The positive is 3.34 on a 30-day SEC yield is always good news, as it's showing that there's potential income coming on board over the next 30 days. And if that number stays at that point, you're going to see a nice solid dividend payout each and every month. This is a monthly paid out dividend. We like it minimum monthlies. Weeklies are the best, but we like the monthlies because you can reinvest the monthly payouts to basically what we'll call a drip process. Is you reinvest it buying more shares and just constantly building up your share count. Or you can do the regular cash flow, which is on the retirement side. The retirement channel is myself. We love the regular cash flow. We love that money coming in so we can set it up to pay bills and live off of and enjoy our days while we're in retirement. Let's take a look at the return of GOOP. 1 month out, we're at 5.51. At 3 months, we're at 12.41. 6 months, 13.98. Again, the year to date at 5.51, which is we're only a month into the reporting side of things, and 1 year, 33.58%. So it shows some solid, heavy growth in the fund over a 12-month period, and it looks like it's continuing over if we break it down to the last 3 months, last 6 months. So very impressive growth across the board on this one. So let's put this into our calculator. The return on GOOP, we put $10,000 into a starting value. We back it up 12 months. So basically, 311, we would have put the money in. We would have bought 379 shares. If you look at the dividends, they pretty much pay that 24 cents was the lowest that they've had, all the way up to 83 cents. Real good average right around that 38-cent mark. So it's a good, nice income. So if you go out from 311 all the way to 211 2025, the stock went up 28.9, which gave us a $957.32 gain, or a 9.57 overall. So not as high as what they were reporting on the other form of 33%, but 9% if you bought in the particular month of March and the value that you'd have here in February. You would have a dividend income of $1,783.13, or 17.83, with a total return of 27.4% when you're including your dividends and stock return. So overall, I like both of these because you get a nice increase in your NAV, in the value of your stock, plus you're getting a nice dividend to live off of. So let's take a look at the chart over time. We call the GOP as a slow rise and stable. And what we show is you look at down at the below where you started off at, just above $25. And it had a nice steady flow for, realistically about 4 solid months until you had the drop off of 2 months. And then again, it starts right back up to where it did again to where we're at today. So it's just a nice slow growth up, slight drop back down to that just above 25 point level, and goes right back up. I like that kind of a chart because realistically, you can get into it at multiple points and not really miss anything. You could have got in at the March date at, like I said, $25, $26. You could have come back in September and bought more right at that about the same price point, and you'd still be ahead throughout the year. Your average across the board is $29.29. Basically a chart like you see here, I would always have to tell you, you gotta buy if you're gonna buy under that average. I would always buy on that bottom line, which is that $26 to $27 range. Try to be in that point. That way you're able to get some gains across the board. But again, this thing shows it's a solid 9% growth across. So, I mean, as long as you're under that average, you're still going to be fine. The chart shows it's holding the price value for a long period of time. You can see that. Plus, the other big thing is Morningstar, it only gives this thing a 2. So it's a very, very low conservative portfolio. A 2, it's a scale of 1 to 100, and 1 being very, very low conservative. A 2 is virtually right in that same program. So very safe overall from what I see. So let's take a look at the summary over GOOP. Stock return, as we said, over 12 months, 9.57%. We're going to give that a solid, strong thumbs up, because if we can get 9% on over 12 months, it's a nice, heavy growth of just a stock, especially when we're looking for dividend. When we take a look at the dividend report, we're getting 17.83%, and that's giving you 1.48% a month, or $148.59 a month on $10,000. So again, that's another strong report back from that one. And then your total stock report returning is the dividends plus your stock return of 27.4. Again, if you're into retirement, you're really looking at the dividends with some positive growth. I don't always look at this total stock return. That's if you're investing to set and hold and let it set and do your thing. So again, I'll give it another thumbs up on that one. So is GOOP good for a retirement account? My answer definitely is going to be a yes, for a couple of reasons. One, your Morningstar risk review is definitely very, very low. When you get down to that 1, 2 is unbelievably, you don't even question it. The next thing you look at is the dividend is great with 17.83% return, which is a very strong return on that money. And then your NAV, you're gaining 9.57% in value over the past 12 months. So the way it looks in the past history is everything looks very, very strong across the board. We do give this a moderate buy. We don't go to a strong buy, but this is where we say this is a moderate buy. You got to make sure you're buying this at the right proper time to gain as much as you possibly can. If you buy at the high point right off the bat, you're going to find yourself not getting the gain of the 9.57% that you would really like to have. So like I said, I would always buy this on just on the drops you will see if you follow that charts, and put that in your account, and you'll be real happy with it. So guys, this is Doug, the Retirement Guy. I want to thank you for watching the video. If you like what you're seeing, click that like button down below. We're trying to give you all the information that we have available to make good decisions on what to buy for your account and how to generate and live off of dividends. If you like what we're doing, hit that subscribe button. Don't miss a single video that we have out there. And most of all, if you have any comments, any opinions at all, put them down below. We're more than happy to answer them, good, bad, and ugly. We're here to help out. And everything it does is helps the channel to grow. And that's what we're looking for. Have a channel for more and more people to be able to see this. Hope you like the information. We'll see you next time.